This is bailout week in Washington and in the financial markets. So the government's proposed a $700 billion bailout. I personally think it's going to cost a lot more. I think it's going to cost well over $1 trillion before it's done. But put that aside for a minute. Let's just talk about the $700 billion. The money will be used to buy the toxic junk that's on the balance sheet of these big financial firms in order to kind of basically both create a price, an understanding of what price might be, and to allow them to take this off their books, rebuild their balance sheet, and get on with business. So how should we think about this? Number one, let's hope it works, because they don't have anything else. There is no more possible solutions. Number two, let's be a little skeptical. First of all, the Treasury wants to do this with virtually no oversight. So you really don't know what kind of deal they're going to cut for the taxpayers. The S&L crisis, the government was able to take over failed S&Ls, but they were able to sell the assets, in many cases as a profit, as the real estate market came back. This is a different situation. These are securities that may not be worth anything, or may not ever come back for a good long time. And then the question becomes, how much of that loss does the taxpayer absorb, and how much of that loss do these companies absorb? Now, the real issue here is if this plan allows the unfreezing of the financial markets, and if it allows capital, money, to be reinvested back in these companies even after these write-downs, because they can now understand what these companies hold again, which they can't right now, then, yeah, it'll work. But if they can't raise more capital after the write-downs, then we're right back where we started, which is in a really, really bad place.